Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bawulski.
Today, data is expected on France's consumer price index and changes in the number of unemployed in Spain. Even if these figures come in better than economists' forecasts, they are unlikely to provide meaningful support for the euro. Therefore, it is better not to rush into long positions. You could plan to act on a decline after a false breakout forms the nearest support at 1.1782. Only this setup would provide a valid entry point with a target for growth toward resistance at 1.1827. A breakout and subsequent retest of this range would confirm the correctness of long positions, opening the way for a larger move toward 1.1868, which would hold the current bearish market development. The ultimate target would be the 1.1908 area, where you could plan to take profits. If EURUSD continues to decline and there is no buying activity around 1782, pressure on the pair may increase. Sellers would then likely push the price toward the more attractive level at 1.1741. Only the formation of a false breakout at that level would be a suitable condition for buying the euro. Immediate long positions on the rebound would be opened from 1.1705, targeting an intraday upward correction of 30-35 pips. Conditions for opening short positions in EURUSD. Sellers are currently acting quite aggressively, but mainly during the US trading session, which gives bulls a chance to show activity during European trading hours. In this case, of strong Eurozone data and a positive market reaction, the first bearish response is expected near resistance at 1.1827. Only a false breakout at this level would justify selling, targeting a decline towards support at 1.1782. A breakdown and consolidation below this range, followed by a retest from below, would provide another suitable opportunity to open short positions, with a move toward 1.1741. Further reinforcing the bearish market tone. The farthest target would be the 1.1705 area, where profits will be taken. If EURUSD moves higher in the first half of the day and bears fail to show activity around 1827, where the moving averages favor sellers, it would be better to postpone short positions until the next resistance at 1868. Selling at that level would be considered only after a failed attempt to consolidate above it. Immediate short positions on the rebound are planned from 1.1908, targeting a downward correction of 30-35 pips.
Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents.
You could plan to buy the pound today if the entry point around 1.3700 is reached, with the target for growth toward 37.27. Around 37.27, you could plan to close long positions and open shorts in opposite direction, targeting a 30-35 pip pullback from this level. Any upside movement in the pound today should be viewed as corrective. Before entering a buy trade, make sure that the MACD indicator is above the zero mark and is just starting to rise from it. You could also plan to buy the pound if the price tests the 1.3675 level twice in a row, while the MACD indicator is in an oversold territory. This would limit the pair's downside potential and trigger a reversal to the upside. In this case, growth can be expected toward the opposite levels at 1.3700 and 37.27. You could plan to sell the pound today after a break below the 1.3675 level, which should lead to a rapid decline in the pair. The key target for sellers will be the 1.3645 level, where you could plan to close short positions and immediately open longs in the opposite direction, targeting a 20-25 pip rebound. Pound sellers are likely to become active if the pair recovers strongly toward major resistance areas. Before entering a sell trade, make sure that the MACD indicator is below the zero mark and is just starting to decline from it. You could also plan to sell the pound if the price tests the 1.3700 twice in a row, while the MACD indicator is in an overbought territory. This would limit the pair's upside potential and lead to a reversal to the downside. A decline toward the opposite levels at 1.3675 and 36.45 can be expected.
That's all for today. See you online soon.